So in 5 minutes, I want to cover a decade in crypto securities business. Next slide. And then I want to cover what I think will be the next decade in crypto securities, taking us through to 2030. And finally, I'd like to share a bit more about, third slide, a new product that we're launching at the moment called BFX and BFXT, and some of the things we're thinking about. So let's jump straight into the first part, and I want to give a decade in crypto securities in 5 minutes. So next slide. So for us, just so you know, if you're not familiar with BnkToTheFuture.com, this is our portfolio companies. We hold equity in approximately over 100 different companies in the industry. We were funding crypto companies before any venture capitalists would look, and we've accumulated lots of equity in lots of different companies. And we hold an online investment platform whereby our investors can co-invest in many of the deals that made our industry what it is today. First slide. So for us, it began in 2010. This is myself and Bliss Dixon, who's here tonight, the co-founders of Bank to the Future. And it started with a book called Bank to the Future. The book, Bank to the Future, which had an A in it, was around our belief that the banking system is completely unsustainable, and it was recommending reforms in order to drive some more sustainability into the banking industry. In 2010, we decided to take the philosophies that we talked about in that book and try and launch a bank, hence the name Bank to the Future. And the idea was to have a non-fractional reserve bank, but the regulators in the UK at the time said that you couldn't do that. You had to actually lend money with client deposits in order to have the word bank in your name. So next slide, please. As a result of this, in 2011, this is the very first Bitcoin conference in the world, and it was in Prague in Europe. Actually, there was a New York one just before that. This is me giving a presentation on Bank to the Future when we had the A. But we had to take it out until we secured a banking license, and 10 years later, we're going a bit full circle here. So in 2011, this is me presenting at the first Bitcoin conference in the world. It was about 20 to 40 people in the room. 20 of those were activists. The other 20 were hardcore computer science geeks. It was a very interesting experience, and we met some of the companies at this that we ended up investing in, companies like BitPay, companies we didn't invest in, like companies like Matt Gox that sponsored it. This was the first, this is where it all began. Next slide. In 2010, we had to lobby the UK regulators to make changes in securities laws in order to allow for us to co-invest, allow people to invest online. The work that we did between 2010 and 2012 was 3 companies where we were lobbying regulators, was later picked up by President Obama to sign into law the Jobs Act, where they updated 80 years of securities laws, and that led to a chain reaction all around the world that began from those early conversations in the UK in 2010. At this stage, we secured, so next slide, we were added to the UK regulator license after 3 years of trying to change securities laws in order to allow for investing online. And in that time, between 2011 and 2013, Bitcoin did pretty well for us. So we no longer needed venture capital funding, and we decided to use everything we'd achieved to support the crypto industry. So in 2014, we started constructing some of the first securities in the world that used Bitcoin. And essentially, we co-founded this fund, a gentleman who I met at the first Bitcoin conference called Max Kaiser. We created a fund called Bitcoin Capital. Some of the companies that we invested in were companies like Kraken that gave a 200x return to our investors more recently. And Bitstamp, for example, a European exchange, a US exchange for Kraken. And we were investing in Bitcoin mining, and we paid out thousands of Bitcoin to all of our investors at a low of about $250 at the time. So a lot of our investors got into Bitcoin for the first time because we had that fiat on-ramps and the regulated securities business in order to allow for that to happen. Next slide. In 2015, we constructed the first Ethereum security. Everyone else was trying to do this without securities laws. We created the Ethereum mining-backed security. It was a play on the mortgage-backed security. It was backed by Ethereum mining, and we paid out thousands and thousands of Ether to all of our investors at approximately $1 per ETH. That later went on to peak at about 1,400 and where it is today. In 2016 rather, we started working with a company called Bitfinex. We saw the disastrous consequences of the Mt. Gox hack. And in 2016, there was 119,000 Bitcoins were stolen from an exchange called Bitfinex. And we worked with Bitfinex to construct the first security token in the world. And it wasn't called a security token because that wasn't the term at the time. But essentially, they issued a debt token to their creditors, the people that lost their Bitcoin on the exchange. And we constructed the equity conversion part, where you could take that debt token, convert it to equity in Bitfinex, that later went on to give our investors about a 25x return just on the equity growth. And also dividends were redistributed from all the profits throughout the 2018 boom markets in crypto. In 2017, BnkToTheFuture got absolutely disrupted. None of our clients wanted to sell equity anymore. One by one, all of our clients called us up. We were all doing, we were about to do equity rounds for companies like Civic and many others. And they all said, no, we're issuing tokens. None of our investors wanted to invest. They all wanted to invest in tokens. Why would you invest in equity when you can get a 10x return, a 100x return in some cases, in 10 minutes after it launches? So we got completely disrupted by ICOs, and our investors and our companies started demanding different products. So rather than selling ICOs and tokens without securities laws, we constructed a process whereby our companies could sell tokens as investment contracts through regulated securities businesses, and not without making the token an actual security in itself. And we tested it out for ourselves and used that process. With the exception of one company, one of our clients, none of them have had any regulatory issues, but Telegram more recently did. In 2018, our clients were demanding more liquidity, so we created a marketplace whereby you could buy and sell the largest companies in crypto via our SPV structure. So we started to create a market. You can now buy shares, for example, in Ripple Labs that was trading at approximately 2.5 times discount compared to what the VCs and banks were paying more recently, which valued it at 10 billion. So that you could buy it on BnkToTheFuture for 2.5 billion valuation. The banks were paying 10 billion for it, and they had about $16 billion worth of assets in the cryptocurrency XRP that they held on the balance sheet. So it becomes a really interesting way to get in, whereby you can actually get better terms by investing in a smaller scale to some of the VCs at the moment. In 2019, we started making different acquisitions. So as I said, we had a US broker-dealer. We ended up selling that to Coinbase so it could go into the security token market, Keystone Capital. But then we ended up making strategic investments in BMI Capital, completing an integration. We also bought altcoin.io, which was a US-based exchange. It was the very first company to do a Bitcoin blockchain to Ethereum blockchain atomic swap, all on-chain in a decentralized way, so that we could turn that into a decentralized yet compliant security token exchange. We also made a strategic investment in Diacall, which was one of the first Adams in the room who's going to be on the panel when we discuss this. And they were trailblazing for many, many years in the security token industry in Europe and in many different blockchain-based companies. So, tempted to do it in 5 minutes, probably over. Just before that, I'm going to go through these a little bit faster because I don't really think we've got the time to go into this in detail. But the next decade that we're looking at is we're now saying to ourselves at BnkToTheFuture, we know what products our investors want. We know which ones made returns. We did extremely well in equity and crypto exchanges. We own equity in many of these companies that built the industry. We hold them in our SPV structure. We can now do interesting things with those companies. We're seeing this intersection between centralized finance, decentralized finance, and security tokens. And we're looking at building in that intersection, and we can talk more about that on the panel. Briefly, in the next slide, I'll go through, for those of you who are not familiar with decentralized finance, it is absolutely growing at the moment. The fact that you can now, in a bear market, hold your crypto, maybe you are bullish on Bitcoin long term, you're bullish on Ethereum long term, you don't actually want to sell that, you can now use it as collateral in order to do all sorts of interesting things, and more of that is being locked up. Thanks to stable coins, now traditional institutions can onboard into crypto. It's very sticky once you convert your fiat into crypto, and now you can do all of these interesting things where returns are being made. There's a bit of an arbitrage between traditional finance and decentralized finance at the moment. We're looking at, while a lot of that's happening in the DeFi space, we're looking at constructing securities around that so that they can take the best of regulated onboarding through centralized finance, combining that with some of the decentralized returns and products, and selling those as securities so that institutional investors and crypto investors can onboard. Next slide. One thing that we've learned over the years is that if you could summarize the last 10 years and sum it up into something today, is that people want to keep Bitcoin because they believe in its value proposition as a store of value, but they want to use Ethereum. And there's a whole load of speculation in between to allow you to accumulate more Ethereum and more Bitcoin. But the utility of Ethereum and the fact it's become a protocol for decentralized finance now is creating utility that's growing at a really fast scale. But the smart contract platform is not really fulfilling the store of value use case. And so therefore people are using these products in order to accumulate more Bitcoin, and that's really the investment thesis that we've seen from a lot of our investors. Next slide. In terms of centralized finance, I talked about it. We've now done approximately $800 million invested in the industry, and that's just direct investments at the valuation when we first invested. We did really well, and our investors did really well investing in equity and crypto exchanges. We did a lot of the different exchanges, and those were the highest performing. And also securities that paid out Ethereum and Bitcoin were the highest performing securities through our platform. So what we're doing with the centralized finance space is the reason we were able to get these opportunities to investors is because we were treated everything as a traditional securities business, onboarded in compliance through centralized finance, but use the power of decentralized finance and crypto in order to actually generate the returns on these traditional securities that both institutional and crypto investors can invest into. In terms of the security token space, we've identified, and what we'll be doing after this is sharing a link with you where we've created an educational video series on why nobody is investing in security tokens right now, what the adoption blockers are, and how to overcome those, and what we think the next decade is going to be. If anyone goes to BnkToTheFuture.com, we've got a new little section called BFX. Go to BFX, you can enter your details there, and we'll be sending out an educational video series on everything we've learned across this space. And so that's the 5 minutes there, and I'll go through the next section before we move to the panel and we can get a bit more interactive, take some of your questions. The reason that we're actually doing this roadshow at the moment is we're looking at our business and saying, what does the next, if we were starting from scratch right now, what would we build? And that is where we're seeing that intersection between centralized finance, decentralized finance, and security tokens. So we're currently in the midst of launching BFX, which is combining all those acquisitions, which is a self-custodial, decentralized yet compliant security token exchange, so that we can then distribute a lot of these securities and allow for the trading of it. So what we're seeing at the moment is many people are focused on the centralized exchanges, but the centralized exchanges just don't have the cost base to grow this industry. And so we're looking at combining many of our onboarding processes through regulated brokers that allow for the trading in a more decentralized way to usher more adoption in the security token space. Just to give you a very brief overview, this bit I would normally go more in depth, but I will go through this fairly fast. And while I'm in New York, we're here in New York for the next. We're doing a bit of a roadshow, meeting institutional investors, getting feedback. So if anyone wants to set up a meeting to discuss this a little bit more, I won't go through the details now, but essentially what we're doing is we're taking our two solutions, BnkToTheFuture.com, which is all of our centralized securities business, and our decentralized business, BFX, and we're looking to distribute all of the revenue that we're earning. We earn revenue in different currencies to our security token holders. And in order to create some kind of stability, rather than what we're seeing in all of the other security tokens right now, is backed by an asset which is convertible into the equity in our parent company, that is both BnkToTheFuture.com, a profitable business, and BFX, our new play in the security token space. So a little bit of a summary there. You can see that those that own the security token, they're going to share in all of the revenue, which is crypto income. They get an equity play, so if we end up exiting, you get all the benefits from our exit. We're seeing a lot of exchanges that they're going to need to pivot into security law compliance, and we've got relationships with all of them as early investors in all of them. And also the growth play that might happen, but we are very uncertain about. I'm going to move to the next slide, and I think I'm going to push forward. You can see a little bit about our structure. We've created a wallet whereby we've been issuing all of our security tokens. We've created an identity solution whereby people can onboard into the security token market in compliance with global broker-dealer networks. And we've got a network of broker-dealers, and we're looking at doing more mergers and acquisitions through our expansion financing as a result of that. I think that's the last slide we're going to go, so carry on to the next one, and next one. And I think we're just going to go right to the end now. Some of our portfolio companies, some of the deals we've been doing. And here's the final thing that our next plans are really that we're going around at the moment. We're looking to launch the BnkToTheFuture security token next as our income generating security token, allow for crypto income convertible into equity. Launch BFX so that these things can be tradable. And then we're looking to pitch all of our clients and see if they want to follow the same formula so that we can drive adoption into the security token market by coming over many of those blockers that are stopping people investing in security token right now. I believe that's the last slide. Yeah, this is the roadshow that we're currently doing. Here's some details. And now I'm going to bring on to the stage, we've got Con. Where are you, Con? Are you going to come up? So Con has some very interesting background in his involvement with security tokens and investment banking, and some of the involved in deals like the T0 deal. And we've got Adam from Diacall and Bank to the Future. So yeah, do you want to take a seat, and I think we'll move over to a panel. Do you want to do a quick test on that one?
Awesome. Yeah, works.
Okay, great. So there's a little background. So what I think would just be great is just give a quick overview of yourself, your involvement in the industry, and then maybe we can move over to some of the crypto investment trends that you'll see from 2020 and beyond.
Hi everyone, I'm Adam Vaziri. I'm the lead security token architect. Now, that's quite a title, but my background is essentially as a lawyer in crypto. I started in 2012. Prior to that, I was working in technology and compliance as a lawyer in London. Discovered Bitcoin, set up the first legal consultancy pretty much in Europe, specializing in assisting companies at the time who were really just using Bitcoin to enter into a mainstream of regulated services, whether that be using Bitcoin for payments, acquiring payments licenses like MSB licenses, etc., or using cryptocurrencies to operate a lottery system, acquiring lottery license, or derivatives on Bitcoin. I acquired a license for a company that was sold on to Kraken for $100 million, crypto facilities. So it was always about taking the concepts around crypto and applying them into the mainstream of regulated services, whether that be in finance or gaming, for example. So that's where I developed really a lot of expertise. But then when it came to the ICO boom, a lot of people were approaching me and saying, well, I need a little bit of advice on how to do an ICO compliantly. And at the time, a lot of people were just putting out smart contracts and receiving anonymous money from around the world. And I think that was a particularly great idea. So we approached the regulator in the Isle of Man. This was one of the biggest ICOs called Anode. And we approached them and said, well, you set up a regulation for exchanges, but we want to apply that for ICOs. We essentially created the first regulated ICO. That was back in 2015. So from now on, it's really about how can we innovate further, how we can bring crypto more into the mainstream, how can we make it more feel like it's a normal thing, not that it's something that's extraordinary, there's something that we should be scared about, there's something that's ordinary but has all the prospects of growth, etc. And we're all interested in. And so that, I've been in this industry for quite a long time from a legal point of view. We're adding that from a financial engineering point of view to create great investment assets.
My name is Colin Davis. I'm with America's Executions. We're a registered broker-dealer. We've kind of got two aspects of the business, two main aspects, and we've just applied for some of the business lines. So we've got a floor business. We're the largest in the New York Stock Exchange, which is the brokerage side, floor brokerage, which is generally it's wholesale equities execution, kind of an old school business. But we built that business while the dinosaurs were leaving the floor and the high frequency guys were kind of taking over. We are all kind of high frequency traders by training and background. I started in the industry working for a large single family office that made their money trading equities, high frequency. Politically, I was always kind of more of a libertarian. Started looking at Bitcoin back in 2012, but wasn't smart enough to, leverage the farm. So I didn't buy any Bitcoin until it was about 3,000 last December, and then sold it recently. But I looked at it more from a theoretical standpoint. I started out as a currency trader, and in 2008 we did very well. We were doing tax dividend arbitrage stuff, and then we were managing the family office's money in a variety of the treasury in a variety of different currencies. So we were kind of looking at it from a global macro perspective. And what I would do is we use purchasing power parity, we use technical trading, all sorts of things. But at one point with the central bank madness, we were kind of looking at it and saying, what do we want to own? There's nothing we want to own. And at that point we were looking at gold, and we were thinking and having theoretical discussions on kind of what's the next thing. Is it, a basket of hard and soft commodities, which are somehow, backing an EU type currency, or is it whatnot? That was the point in time when Bitcoin was really taking off as a project conceptually. Fast forward, I guess 4 or 5 years later, I talked to the group and asked them if anyone was investing, if anybody had interest, if we were going to set up a trading arm. The answer was no. I went off and did some other things on the private equity side. And then I asked, they said, now we're big, we've got X amount of money in the trading side. So we had an execution business, a predecessor firm that we used to execute for. The founder of that and started another group, which was America's Executions. The group of partners and individuals started doing some ICOs privately as a syndicate, not through a regulated entity, just as private investors. And the truth is, we almost got caught up in a couple scams. We looked at it and we said, there's just too many cowboys in this space, and these really are securities. We were trading them as more or less a flip. But we saw the validity of what became an STO. And we were approached at the time when we were just adding business lines and set up the investment banking division by the folks at T0 that we had a relationship with. And we acted as their lead placement agent, so we went through the process of drafting the docs. And, a slew of different lawyers that all claimed to know what they were doing, many of which ended up getting into trouble because it was a new space, and they were signing opinions on all sorts of things that they probably shouldn't sign opinions on. And I remember we were speaking about it earlier. We were in Puerto Rico at one of the conferences, and it was a totally different crowd than is here tonight or as at any of the recent events. A lot more tech people, a lot more gamers, a lot more people that viewed this as a pioneering new space where the SEC and FINRA and others would not be relevant anymore, and these were not securities. And we kind of took an alternate tack and viewed them as securities, and they were deemed as such. And just because you don't get a knock on your door today doesn't mean you won't get a knock on the door in the future, and retroactively they can come back and do a number of things. So we treated T0 really as a traditional private placement, Reg D, Reg S, and catered the documents as such. Those documents ended up getting utilized by, I think, a number of different companies over the last couple of years and done STOs. That was the foundation of their legal work. But through that offering, we basically, built the investment banking business and took a lot of inbound interest because T0 was a hot deal from about 50 different countries. We ended up onboarding and doing KYC on, I think, 4,500 different investors. So it's kind of an interesting use case because it effectively is like a mega private placement, almost like an IPO. So we ended up having roughly 1,300 investors come into that and put in $134 million. Everything ranging from $500, all accredited obviously, $500 to $30 million, which was an affiliate company of T0. So where are we today? I think we went from piping hot to crypto winter, and now you're looking at it and saying, where do we go next? We look at it, we haven't done a lot in 2019. We didn't do too much. We looked at probably 200 deals in some capacity. First page, or first, all 40 pages, the legal docs, and months of work. Taken on a few different projects, some traditional, some as STOs. But the fact of the matter is these things still need to be sold. There's this plethora of buyers out there that have to have an STO because at the end of the day, there are 100 different protocols. There's all sorts of complexity. There are, 30 some odd ATSs, 2 digital ATSs. Who's going to be the winner? Where's it going to trade? And it's a chicken and the egg because, you're pitching liquidity in many cases, but liquidity doesn't exist, right? So from my perspective, you really have to look for assets that are probably illiquid and provide documents that are more or less traditional documents with a digital wrapper conversion. So you have an option to convert at a time of future liquidity, right? So something like private equity structure or hedge fund structure. Spice VC did something; they were like the first, I think, to do that.
So,
but something we may
ask a few questions. So, what we've seen is these two types of investors. You've got institutional investors, and when we've been sat down with institutional investors with other offerings, and you tell them about one of these deals, they're saying things like, well, yeah, if I like this deal, then can you just take out the token because I can't be bothered with custody and figuring out how to own a private key, and if I like the deal, I'll just invest in it like that. Then you go to a crypto investor and you say something like, well, let's invest in a tokenized real estate investment trust that pays 8% return per annum. And they say, why would I ever give up my Bitcoin for such a boring thing, 8% per annum? And so who are going to be buyers of these security tokens? And how's it going to get over the chicken and egg?
Yeah, I think that's a great question. It's a great point. And, every project's different. So for instance, we've looked at sports tokenization. I was a former athlete. I've looked at 2 different projects, and we bounced this idea around 2 years ago with some industry folks. And for instance, fans. The concept of tokenizing a percentage of a professional sports franchise. There are all sorts of league regulations in the U.S., but perhaps a premier, not a premier league, but a second or third division team. In that regard, you've got people that would want to, own, as the Green Bay Packers fans do, as a part of the sports franchise. You could use a digital wallet and push them, specials in terms of as an owner, perks. There are a lot of interesting use cases. So, for instance, that you get a lot of marketability behind. There are other real estate projects where you'd have to be piggybacking on a lot of, marketing and press around the project. I think that right now there's some interesting things happening on the credit side of U.S. real estate because you've got negative yields in Europe. So there's kind of there's been a chase for yields for a long time. There's some real estate mezz debt that's been tokenized and syndicated overseas that's paying current, 10, 12%, 8, 10, 12%, which is the size of that. So I think the last one, the one that I know is on 18, which is very small.
So let's try it, Adam. So lead security token architects. What are you going to architect that's going to make people want to invest in these security tokens?
Yeah, I think there is the aspect where everything that will be tokenized will be, like everything, whether it's property or whatever. But to me, I don't think that's particularly interesting from my point of view. I got into crypto because I was interested in Bitcoin. I was interested in this new phenomenon that exists in human society that has a massive revolutionary force in how we can do things. That is game changing. Tokenizing real estate is interesting, but it's not game changing. So for me, what I'm interested in when we talk about security tokens is, at the moment there's Bitcoin, at the moment there's Ethereum, and there's this thing called Binance token, right? BNB. It's a great token. It increases all the time. And it increases, it's a great outperforms Bitcoin. Bitcoin goes in the bear market, BNB increases. But to all intents and purposes, it's effectively a security. If you view it that they're burning their tokens with their own profits, they're essentially buying back their own tokens. To me, that's a fantastic security token. And those are the types of security tokens that I'd like to build. Security tokens that come out of the crypto industry. And one such security token that I was really excited about is, if you want to get into Bitcoin but you don't want to buy Bitcoin, you don't want to ride the roller coaster, not everyone has the stomach to just buy Bitcoin and then regret, it's gone down 20%. Not everyone has the stomach for that type of volatility. But people buy mining contracts because they want to earn Bitcoin and not think about the price of Bitcoin. That they can think, I just purchased this mining contract and I have exposure to the generation of Bitcoin over a period of time. I don't have to worry about, did I buy Bitcoin at the right price? No, you're buying a mining contract, you're buying hashing power. You don't have to worry about the question, did I buy it at the right price? So that to me is exciting. It's about, how can I earn crypto without buying crypto? That is an exciting investment asset for me. If you could just get a percentage out of every exchange, all of the little bits of Bitcoin that goes around, all the bits of Ether that goes around, if you could just get a little percentage of that for an investment asset, and that you could receive it directly in your own wallet, that to me is exciting. Look at Binance, it went from nothing to an explosion, in a matter of 2 years. It's probably more profitable than JP Morgan. And it's a crypto business. Imagine if you could just have 2% of the crypto that they receive. And that's a security token to me. That's the definition of a security token. But it's from within the crypto industry. So I'm all about how you can build it up and how you can give greater exposure to people. And not everyone has the stomach just to buy Bitcoin. That's the reality.
Okay, so in the audience, I think we've got some people that are very used to investing in such crypto projects and products, and then we've got institutional investors that are seeing the macroeconomic, global economic situation, much like Con was talking about. What do I want to hold right now? And Bitcoin is, it should be top of everybody's list as something to explore, and probably a well-diversified portfolio should have such a thing that might be a non-correlated asset. That might be a responsible thing for people to do in the future. But when it comes to the whole process of unregulated exchanges, unregulated onboarding, in my time in Bitcoin, I've seen my $30 Bitcoin crash to $3 in one day. I've seen my $1,250 Bitcoin crash to $250 in a few days after Mount Gold. I've seen my $20,000 Bitcoin crash to $3,000 as a result of ICO Ponzi schemes and all sorts of shenanigans that were happening in the industry. I fully expect my $100,000 Bitcoin to crash to $30,000 as a result of something else that happens in our industry. How can institutions that have a fiduciary duty to be responsible to their investors, how are they going to get in this industry, and what's how are we going to bridge that gap?
Well, I think a lot of it's job owning, to be honest. The institutions have pushed people into all sorts of bad investments at publishers times over the past, right? So I think you want to believe that that's the case, but the reality of it is what's acceptable and what do people want to buy, and quite often you look at it and it's like, what are the talking heads saying on CNBC? And every time they add a new ticker, it's like the end is here. The VIX didn't have a ticker on CNBC. When VIX got a ticker, it's like, oh, let's look at VIX. It's at 40, and everybody wants to buy the VIX at 40. You need to be buying it at 9, 10. So I think that a lot of the custody issues will be solved. I think that from our perspective, we're looking at things with iris technology and otherwise for security purposes, because you just have to be, you have to hold everything to an even higher standard than equities and then through some of these traditional products to get the buy-in, because there's a natural skepticism. It went from euphoria to total skepticism, and now you're kind of building back up. But that being said, every major institution either has a blockchain team, they have some sort of initiative, they're in working groups, they're in the room right now. So there's a lot of interest, and you're trying to figure out where it all plays in. And the word democratization is a kind of cliche and overused in the industry, but I think it's very true. When you look at real estate, it may not be the sexiest thing in terms of, for traditional crypto or for mining purposes, but it's the largest asset class really in the world. And, you look at rates that people are paying in certain parts of the world and what the real risk is, and there's all this lack of, there's all this inefficiency in the process because of title, because of all sorts of reasons why, the peer-to-peer lending and things that will end up happening because protocols and because securities, I think, can be made to be more safe actually through blockchain technology. And with that, I think you'll have more exposure, and you'll strip out a lot of inefficiency, and you'll probably lose a lot of jobs in some regards. Tech can be deflationary, but it also creates immense opportunities to invest in new assets, new asset classes, and for somebody that was a retail investor to perhaps invest in a hedge fund, as opposed to because you securitize $150 million of it, or to do a loan against assets in Nigeria, for instance, it shouldn't be a 20% loan, it should probably be 10%. So I find it's an interesting time, but it's still being shaken out. You haven't quite figured out who the winners are on the exchanges, the ATSs, but a lot can be done within the protocols that I think once the regulators get comfortable will become standard. 2-day settlement, 3-day settlement, naked short selling, all these things that exist in our markets that have been around forever really are very antiquated and are ripe for disruption.
Yeah. My perception is, right, you want institutions to enter the market. Well, there are things like Grayscale that create something in a traditional market where people can invest, or an ETF, or these innovations within traditional finance. All you're doing is changing the underlying asset. It could be anything. It could be a chair. That to me is not. It's interesting, of course, for institutions and pension funds, etc., so they can have exposure without worrying about the technicals. But for me, the reason why kind of security tokens and investment opportunities in crypto haven't taken off so much is because there are not many companies like BnkToTheFuture that give you exposure to companies in crypto, but do it compliantly. So if you wanted to have access to like Bitstamp or early equity, you wouldn't be able to get into that realm. And they're the ones building on top of Bitcoin. If you believe Bitcoin's going to go to the moon, then those companies will go too. And that's why there are so many unicorns in crypto now, because of the price of Bitcoin. At the time they started, it was like $10. Now it's like $8,000, $9,000. So of course they're unicorns. So companies like BnkToTheFuture don't really exist to give people access to the exposure of the long-term trend of crypto. And investment assets that are akin to what Bank to the Future has provided, which is giving you exposure to those companies, have not existed. Because they've all been like Ponzi schemes, ICOs where you don't really know the return. Everyone flipping as soon as it hits the market, people getting great deals and then dropping on the retail investors. That's how this market has operated. And unfortunately, you have to kind of find your way through this market to find something that's genuine and something that's actually regulated that you can trust. And so an institution like Bank to the Future can shape products that are regulated, that go through regulated brokers, but that give you that direct exposure to the crypto growth that is there, that is happening. And it's not something that you necessarily need to speculate on. You don't have to say, well, do I think the crypto is going to grow? Well, it's proven that it has grown. The question is, will it grow further? And if you think that Bitcoin is a deflationary currency and it's the only deflationary currency that exists, then realistically, it will grow further. So then, do you want exposure to Bitcoin directly, or do you want exposure to the companies that are building on Bitcoin? Well, you've got to do it through a company like Bank to the Future. Do you want exposure to a security token that's going to give you exposure to the whole industry? Then it's got to come from something that's regulated like Bank to the Future. So we're at that cusp of providing legitimate products for the markets that institutions, as well as retail punters, can get involved in.
Okay, so we're going to do one more question. Just before we do the one more closing question, Yep. Sorry. Okay, just before I do that, we've got some of our investors in the room. We invited some of our investors from New York. If you are one of our investors, you've already made investments through our platform. We've got a gift for you. It's a Bank to the Future branded ledger wallet. And also we're going to pass around a bowl. And if anyone wants to drop their business card, we'll use it to follow up and share with you the video series, the educational video series that we talked about. We'll only email you once in case you want to do that. And at the end of this, after the last question, we'll just pull out a random business card and you can have one of our Bank to the Future branded ledger wallets. And just on the factor of ledger wallets, obviously the original reason that got me excited in this industry all those years ago was the fact that Bitcoin actually gave you the ability to own your own money. Something that we accept is just not available anymore. When you deposit your money at a bank, the bank becomes the legal owner of your money, they spend it as they wish, and the money supply is subject to whatever the central bank decides that it should be based upon its economic models. But Bitcoin allowed you to own your own money on a wallet just like this, spend your own money peer-to-peer, and have a monetary policy that's fixed and cannot change. So my final question is really, with all these regulations coming through, is the industry going to prevail and achieve that almost utopia vision of allowing people self-sovereign financial services? The DeFi products that they're looking at right now, are we going to continue to be allowed to own our own money and the freedoms that come from that, spend our own money peer-to-peer, have a monetary policy that's independent of any government's policy? Or are we going to regulate this all the way through and create the traditional financial system but on a blockchain and essentially create the same thing again, but using blockchain as the backbone and create a cheaper way for banks to make more money? Which one's going to win? Are they both going to prevail? And what's going to happen next?
I think to a degree it's like the saying, there's two things that are certain, death and taxes. So in that regard, in the US, you look at it and you say one thing's for certain is that you're going to end up paying your taxes. Okay, maybe the audit numbers and whatnot are going down every year, but the idea is that the government is always going to, from my perspective, be involved when it comes to big money. Now, when it comes to creating a digital currency, you kind of have to think of it as far as what are the motivations, right? So right now we've been doing QE, we've done QE for roughly 10 years. So you've been creating this phantom cash out of thin air effectively, right? So do you want to create a tangible, effectively a gold standard or something like that on a digital national currency? Probably not now, but there are other countries that have capital controls that are really looking at, how they can keep money in, how they can, avoid people from buying gold in India. You've got China capital controls, so I think from a taxation and a gray market standpoint, increasing tax rolls, there's some reasons why they might want it. But then at the same time, from an inflationary standpoint, central bank nonsense, maybe not. So I don't know if that answers the question. I think that ultimately many things do move towards a digital currency, depending upon the countries and the sovereignty. But for instance, in the U.S., I think you're never going to get away from U.S. regulation if you're a U.S.-based individual. You're going to have to play by the rules or take some risk in not playing by the rules, which have major consequences.
Yeah, I mean, from my point of view, I think that would be a terrible thing if people didn't have the option to hold their own Bitcoin. I don't think we're ever going to get to that situation. What I predicted back in 2012 when I started in Bitcoin is that obviously anti-money laundering regulations are going to kick in because we have a very complex, elaborate anti-money laundering scheme that operates internationally, and it's run through the FATF, Financial Action Task Force. Obviously, you can't allow for a peer-to-peer digital currency that can allow transactions across borders at scale and not be concerned from an anti-money laundering point of view. And that's why policy was created. I mean, the US were the first, FinCEN back in 2013 decided that anyone involved in transacting cryptocurrencies as a service needed to register as an MSB and needed to comply with the Banking Secrecy Act, etc., etc. And now you see, as of the 10th of January this year, that the implementation of the FATF guidelines are coming into force, which will mean that pretty much every country in the world will require anyone involved in crypto business to register and conduct anti-money laundering checks on their customers and share data with other people who may be involved in a transaction, which is called trafficking. Okay, that is inevitable. Anyone that thought that was never going to happen was deluded. But the reality is, what consequence will that have on the industry? Of course, well, the overhead is going to increase. So if you're a crypto startup and you want to get going, bear in mind a third of your cost base is going to be compliance related. And that's why, for me, for example, regulatory technology is fundamental to ensuring that you have a way of mitigating that cost base. Without regulatory technology like self-sovereign identity, AML APIs, things like that can reduce the cost of regulatory compliance, it's going to be pretty much impossible for there to be a kind of, diversified crypto industry. But it's there. There's great red tech out there that can be used to keep the cost base low but ensure compliance. But what that means fundamentally is that people can still hold their assets. You can still be compliant. You can still be legitimate as a business. You can be a recognized cryptocurrency exchange that companies can invest in and not feel in 2 years' time they're going to go down the plug hole because the FBI are putting them behind bars. You don't want that if you're investing in that company. And the companies need to raise money. So they don't want that to be tarnished with that fact. So regulation is good because it gives legitimacy. But the impact of it will be that the costs will rise, but you need red tech to keep the costs low. But the impact is not going to be fundamental. It's not going to stamp out crypto by any means. The most, let's say most regulated country in the world is China. And I was tracking the Bitcoin legality back in 2014. I had a website called BitLegal. We had a world map with different colors. It was green, yellow, red, depending on whether it was illegal. China was, strangely enough, green for about 4 years and then switched, boom, red, overnight. But did it impact the use of Bitcoin in China? Not really. People still buy Bitcoin. They do it peer-to-peer. They don't go on exchanges. They still buy Bitcoin. Are you going to be able to stamp out entirely people's ability to use the internet? If you can stamp out the internet, then you can stamp out Bitcoin. Now, you might say in Iran and some parts of India when there were revolutions happening that they turned off the internet. But then the decentralizing mission is still ongoing, and people are finding ways of communicating without having centralized fees. And that is a trend technological trends. So for me, you'll never stamp out crypto. It will always be still peer-to-peer, but it's not particularly convenient for it to be peer-to-peer all the time. But for businesses, they will be regulated, and that gives them legitimacy and increases the cost base, but red tape keeps it lower. So I think it's sustainable to continue as a crypto business. But as an individual, you can still be self-sovereign. If you want to hold your Bitcoin, you can do it. No one's stopping you.
Awesome. So I think that's three guys that could really talk about crypto for quite a while. Hey? So we've got this room till 8:30. If anyone wants to come up, and we'll be doing some networking. There's some really great curated people in this room. There's many of our investors here, and so it's worth getting to know everybody. We'll be chucked out at about 8:30. As I said, we're on a roadshow. I'm leaving New York on Sunday. We want to fit in as many meetings with investors that are really interested investing in this space. We're off to San Francisco next week, and then I'm headed to Satoshi Roundtable, which is in Cancun, and then we're back doing a bit of an Asia roadshow and various other things. So if anyone's got any people that they think I should be connected with, really appreciate the introductions. Enjoy yourself. Thank you for turning up, and it's great to actually be able to bring some investment opportunities in the US in a time when almost all crypto companies are saying no to US. So thanks everybody. And okay, so we got to pick one from the business cards, and you can come and get your Ledger wallet. You know about
Peg Samuel.
Peg Samuel.
Hey.
Okay, you go Peg. All right, there's your BnkToTheFuture brand wallet. Hopefully that becomes a collectible in the future. So thank you everybody, and we'll be around until we get chucked out. And yeah, thank you. Thanks to the panelists. Hey, how you doing?